Well, the pound has fallen significantly in value over the last week or two. In fact, I don't think in my working life I've seen sterling dollar so low. The last time it was 105.45 was in 85, and below that, the 103 that we touched on Monday, that was in the 70s. So a very long time ago. So effectively for Gibraltar, anything you go out of Gibraltar, for example, the euro, if you want to go to travel to America, everything is that much more expensive. So it's creating a lot of additional expense to people who are going away, people shopping in Spain, as the pound has fallen so much. On the euro front, we're looking at 110 lately. And there's rumors that the pound to dollar could even go to parity, i.e. 1.
What's causing a huge amount of concern at the moment is the Bank of England's predictions that its interest rates could rise to as much as 6% by next year. How is that going to directly impact Gibraltar, particularly, people who are buying affordable homes, for example? We know that some of them will be ready next summer at the same time. Can you just talk us through that?
Yes, well, with a higher interest rate comes higher borrowing costs. That is a given. So essentially, everybody's mortgages are becoming a lot more expensive, and hence their disposable income is being reduced. You say July next year, there is a talk that in the UK we could see a recession towards quarter 2, quarter 3 next year. In fact, the Bank of England predicted the recession to hit this year, at the end of the year. We still need to see that happening. Definitely the UK economy is slowing down. And if that does happen, we could very likely see a decrease in interest rates in 2023. So even though the Bank of England is definitely predicting, and there's rumours about interest rate hitting 6%, we could also see in 2023 interest rates coming down slightly. Not to the levels we were in December, but probably lower than 6%. But again, right now there is such a big disparity between what economists are saying, what the markets are pricing in. It's very difficult to predict. Right now there's a meeting scheduled for the 3rd of November, but it is widely expected the Bank of England will increase rates in between meetings. So that remains to be seen. But this is where your previous question on how high interest rates will increase. Some economists are predicting that from now till the end of the year we could see a 2% increase in rates. So Gibraltar will probably follow suit and follow the Bank of England.
In terms of market stability, what is the outlook over the next few months?
That is a very, very good question. It's very difficult to predict right now what is going to happen. In fact, the Bank of England, as you well know, acted on yesterday and went in to start buying out the longer term bonds to provide what you've said, some market stability, because what we were seeing due to the mini budget and the view that this mini budget has brought about amongst the economists, amongst other countries, the Bank of England has had to step in to try and stabilize at least the longer dated term of the bond market. So the Bank of England has had to step in, and they've given up to the 14th of October when this purchase program will carry on, expected to be around 60 to 65 billion pounds worth. Going forward after that, it will depend on whether or not the current UK government decides to keep these new budget measures they've put in place, or they decide that maybe they need to revise it. I mean, the IMF was very outspoken a few days ago, and they came out saying, this may need some revision on the UK side. The budgets are also being criticised by the United States because it's causing a lot of international turmoil.